Hello and welcome to the section of the website set up for our Canadian investors. It's a Q&A section where we answer some different questions that our Canadian students have about investing in real estate in the United States or investing in tax liens in the United States. For this particular Q&A, the question we have is this. Once I have my ITIN or my individual taxpayer ID number, which we covered in a previous Q&A, do I need to form a business entity to invest? This is actually a really good question, and it has a couple of different answers. But the first is we have to put a disclaimer in here that we are not tax professionals, and we therefore cannot give tax advice. The answer to this question has a lot to do with what is going to provide you with the best tax benefits and the best overall protection for yourself and for your investments. So the best way to really find out, I think, the exact answer on this is going to be to talk with a local tax expert that can help you with that. Specifically, if you're a Canadian, you need to talk to a Canadian accountant that can let you see and understand what the best entity is going to be and why that's the case, because it changes from place to place. The best entity in the United States may not be the best entity for Canadian investors. Now, the answer to that question as to whether or not do I need to form a business entity now that I have an ITIN, that answer actually depends on what you're investing in. Those that are investing in tax liens are not purchasing real estate. They're actually only purchasing a lien against the property. So tax lien investors are investing to earn high interest rate returns. And they want to do that consistently. They want to be able to earn those returns, reinvest those funds back into tax liens. But they're not actually investing in real estate. They're just simply purchasing liens against the real estate. So there's actually no added liability there from the perspective of normal property ownership because you don't own the property. So just investing with even just an ITIN with tax liens might be sufficient. But again, that may not offer you the best tax benefits and advantages. That's something you'd have to consult a local attorney to find out. Now, those that are purchasing tax deeds are under a different set of circumstances. They are acquiring property outright. So they're purchasing property outright that they'll own. Those individuals will certainly benefit from the protection that a business entity can provide them with. So the short answer here is if you're purchasing tax liens, it's not necessary, but it could be a good idea, and it could be something that provides you with additional tax benefits. If you are purchasing tax deeds, then it becomes more important because you have the added benefit of the protection that the business entity can provide you with, in addition to the tax benefits that can also be offered.